Hey folks, it's Simon here with your daily video newsletter for Friday the 19th of April 2024. So I've got a chart of Netflix here. Netflix is of interest today because Netflix is always the first of the big cap tech stocks to report earnings. They reported earnings after market on Thursday, and the market reaction was not that warm. Stock dropped about 4.5% after market. I mean, well within the expected move. The expected move for Netflix was like $50, and the stock dropped sort of $28. So it wasn't a huge move. But what was kind of surprising is the fact that Netflix reported earnings per share of $5.28, which is well ahead of expectations of $4.52. Top line revenues also beat expectations. Paid memberships topped 269 million, which is more than 5 million more than expected. And the strong membership number comes as Netflix added 9.3 million members, more than doubling forecasts. And look, this happens every earnings season, not to Netflix, but to a whole range of stocks. And very often, even if I gave you what numbers the company was going to report beforehand, you would still not necessarily be able to tell me with any accuracy whether the stock would be up or down post-release of their earnings. This is what I refer to as earnings roulette. And as a trader, and as an options trader, I've got really zero interest in holding positions through earnings. I will sometimes do vol crush trades where I'm betting on the actual move being smaller than the expected move. But, I never hold directional positions through an earnings announcement. As the first big tech stock to report earnings, Netflix can often be a little bit of a barometer towards earnings sentiment for the season. And clearly sentiment here is a little on the bearish side. A sell-off after what looked like blowout results leads us to the conclusion that sentiment here is leaning bearishly. And that kind of makes sense because that's sort of the way sentiment is leaning towards the broader market. I'll just bring up the S&P Futures here. They're rolling over pretty hard, and it really looks to me like we've gone from a buy the dip to a sell the rip kind of environment here. As I said in yesterday's video, check that out if you missed it, now is not a good time to be pressing your shorts. We should get some sort of a relief rally anytime soon, but I think the next rally is one to be sold. That's not to say I think we're entering a nasty bear market. That's not my base case view at this point, but I think there is more downside over the next few weeks. And until I see evidence to the contrary, rallies here are to be sold. That's what I got for you today. I hope it helps. I wish you good trading, and I will catch you next week. Have a great weekend.